Hello and welcome to TheoTrade. My name is Doc Severson and this is the Theo Night Report for Thursday, September 1st. So I'll start out today by looking at a chart of the S&P futures from about noon Eastern time yesterday. And since that bottom, we've seen essentially about a 17-point rally higher. And actually the futures gapped up quite high overnight, especially with the European Open. And so you're wondering, okay, are we just going to ramp right up to the non-farm payrolls report tomorrow morning? Well, if that was your bias and if that was your approach to expect continued upside, you probably had a really difficult day. This is why it can be so important to look over somebody's shoulder. And I'm not just talking about looking over somebody's shoulder after the markets close when anybody can kind of scroll back into a chart and say, yeah, we would have done this here and we would have done this there. Sometimes it's really important to have somebody that you're listening to in real time to be able to code what's happening in the market, almost like a play-by-play announcer that's telling you what's happening and what's about to happen. To that point, I'd like to play you a couple of minutes from Don Kaufman's session this morning as he really just nailed the turn in the markets this morning as the bottom fell out.
The vast amount of the trade has actually occurred 2060 right into the 2080 range. So as I said, all the hedging activity, as we test the edge of the ranges, okay, of 2160, what actually occurs is when we're actually trading 2160, firms are selling S&P futures contracts, then turning around buying S&P futures contracts. The bottom line is this: when we test the edge of the range, what it's ultimately doing is allowing them to offload a degree of their risk. The more risk they offload at those levels, the less pertinent that particular level becomes. So at this point, we could probably crest through 2160, see a big burst of volume again at 2160. Then we really could get trading. Below 2160, you would actually see some rather extreme volume and likely some more extreme volatility. The S&Ps got smacked and every one of my trades just filled instantly. That's why I got to get a good feel for the trading day. Now I'm going to sit back and I'm going to wait, because I'm telling you, it feels like, and I went out on a limb earlier, it feels like we're not only going to test 2160, okay, but we're going to possibly punch it and just ride right through it. And I think what may happen here, I think we're going to crest 2160, and that's actually going to spark the sell side in the NASDAQ. Here we are, 2160 on it. We are on it right now, and we should see bursts of volume coming out of the woodwork here with the hedging activity that's going to have to go on right at this level. There's a huge strike inside of the S&Ps, okay? Ridiculous amounts of risk. The NASDAQ futures just backed off by 5 points in the last, 30 seconds, and that's all we're going to need to progress a bit lower. Again, not even looking at the ticks right now because the trade intensity, it's there. You didn't feel it. That's 15,000 contracts that traded, and we just crested to the lows, and we're off and running right now. Again, you're now looking at the XLF down almost a full %, continues to kind of forge forward. The bonds, they haven't moved much. All right, they made their move. Again, there may be no stopping us. For a few points lower, you start to get below 2155, and this could actually turn into a real sell-side day. As I said about the NASDAQ, it was down 9. It's now down 18. That's all we needed to keep going.
So as I think you can see and hear, that's pretty valuable stuff to be able to uncover and uncode what's going on in the market as it's happening in real time, and not just at the end of the day to say, yeah, you should have done this here and you should have done that there. These are not easy markets, as you can see, based on just the last couple of months here. We've been basically stuck in this range since around the midpoint of about the July timeframe. So 6 to 8 weeks of absolutely nothing going on here and just being stuck in a range. Now, originally, we were kind of base on a base. And so what that looks like is the initial base off of the Brexit lows was broken to the upside, and we set up a secondary base up here. Well, guess what? We're right back down into the original base again. So where does this leave us for tomorrow? Where does this leave us for tomorrow? Well, at this point, I think you can see that we have a very important level of support here, which is going to be right around, and these are the S&P futures, by the way. So the cash index is going to be slightly different from this, but this is a very important level. It's going to be about 2120 or so. Now, on the other side of the coin, yes, it could be possible that we get some good news and people buy into the good news, although I think this eventually will become a fade. And that's going to be up there at about 2200. So you can see we're almost like exactly halfway in the middle of this range. Now, personally, what I'd like to be able to see is an initial move higher, which becomes kind of a chasing move for the retail traders. And then ultimately, I like to see that move faded back into, so we can kind of reset after the whole Brexit mess and kind of put a big reset button on the market and allow this to start again as we get into the fourth quarter for the year. Now, the next thing I'm expecting to see starting tomorrow and certainly continuing into next week is an increase in realized and then ultimately maybe implied volatility. So we are starting to see an increase in implied volatility. We still see very, very low realized volatility. This will not stay like this for very long. I think these two will continue to kind of drift higher at this point. So even if we do end up going higher, I believe that at some point we're going to see a lot more realized volatility coming into the market, as we're really heading into two of the most volatile months of the year, traditionally September and October. Now, keep in mind what's going to happen tomorrow morning. So, of course, the non-farm payrolls number comes out at 8:30 a.m. Eastern, 7:30 Central. And then after that, the market's going to have some type of reaction, which may even be faded eventually. A lot of times, the first reaction is not the correct reaction, similar to an FOMC release. But usually by the time the cash market opens, or within about a half an hour, the real move is uncovered. And believe me, traders are going to be in a real rush to push forward that real move tomorrow so that they can square up their positions, settle their risk for the long weekend, and then get out of town. So you're going to see an awful lot of swivel chairing sometime about an hour after the market has done the cash open. So tomorrow is definitely not a day where you want to sit around all day long and try to watch the market. This is a very common thing to do for retail traders that work 5 days a week and never get to watch the market. All of a sudden they find themselves with a little bit of holiday time. Maybe you're getting Friday off, something like that. But what you're going to find is that if you do actively try to trade the market on Friday, normally it's going to be a very frustrating experience. You're just not going to see the movement. You're not going to see the linearity. You're not going to see the volume that you normally would be. And it wouldn't be the first time I've seen people trapped into holding over the weekend, which is absolutely the wrong thing to do. So I would be very, very cautious if you're going to be trading intraday tomorrow. And don't forget, there's even some futures trading that occurs in the Globex hours on Monday, even though the cash market is not open. So we do actually see some futures trading on Monday in the Globex session, but there is no cash market open. So we'll get back to normal next Tuesday, but really the normal market does not occur until about the second week of September, when everybody is back from school, back from vacations, back from everything, and the market will assume full volatility, and we hope to see some range that goes along with that. So thanks for listening, folks, and don't forget to catch us in tomorrow's report, and have a great holiday weekend. Take care.